I have Nike stock from 1983, stock that was originally purchased for 27 cents per share. I'm going to show you in this video exactly how much it's worth today. But more importantly, I'm going to show you what its growth has looked like over the last 4 decades, going all the way back to when it was originally purchased in 1983. I'm going to be extremely transparent with you as I walk through both the highs and the lows of owning this stock for such a long period in time. And if you stick around to the end of this video, I'm going to show you exactly what I'm doing with it today. Let me set the stage for you. The year's 1983, and Nike is a fumbling shoe startup. Adidas is dominating the space. But in 1983, something dramatically changed. Nike signs a shoe deal with the one and only Michael Jordan. $2.5 million 5-year deal, and it changes Nike forever. The best part about that for me is that I inherited stock that was purchased in 1983, a year before Michael Jordan signed his deal. Now you might be wondering, why would somebody have bought the stock in 1983 if Michael Jordan didn't sign until 1984? Well, the gentleman who bought this company was also somebody who is near and dear to the basketball scene. He actually won a national championship at Indiana University. Not the football team, the basketball team. I know, it's 2026, they're a football school now. But back then, they were a basketball school. Now, believe it or not, this stock has been held in the family all the way going back to 1983. And you are not going to believe what the gain on this stock is. 23,522%. So you think that you hit a home run. Think about that crazy rate of return. All right, I know that rate of return is crazy, but I want to see if anybody watching this video can top it. Comment below the highest percentage gain you have in your portfolio in the comments. And if you're enjoying this content so far, don't forget to subscribe to the channel because we're putting out more and more content just like this. The crazy part of that return is the highs and the lows that we have experienced over the course of the last 4 decades. Let me give you a little bit of perspective. So as I mentioned at the beginning of this video, back in 1983, when this was purchased, the share price was 27 cents. Now that's an adjusted share price for stock splits, but for all intents and purposes, the share price was 27 cents per share. Let's move forward 10 years to 1993. In 1993, the share value was $1.80. So an amazing rate of return. Over the course of 10 years, it had almost 8x in value. Now, it starts to get crazy here moving into the 2000s. From 1994 to 2004, the stock grew from $1.80 all the way up to $10. So again, it nearly 5x'd over the course of the next 10 years. And things just continued to accelerate. From 2004 to 2014, it nearly 4x'd, going from $10 a share up to nearly $40 a share, right at $39 per share. And now the growth continued into COVID. And Nike was one of those amazing COVID stocks. And we rode the wave in 2021 all the way up to $150 per share, only to have that number be cut nearly in half in 2024. Come 2024, we were in a situation that Nike stock had dropped all the way down to $100 per share. All the way until today, which we're still holding it in 2026, down to $62 per share. So the highs and the lows have been really serious in this stock. And this is something that not only I have faced, but hundreds of Americans face when they own low basis stock. And as I went through those highs and the lows, I'm about to share with you exactly the emotions that I felt and the money moves that I made to make sure that I made good, smart decisions with my low basis stock. So the first thing that I did is that our family is very charitably inclined. We like to give money away. We like to support our church. We like to support other charities that we're involved in. And the most effective way to do that is to donate low basis stock. And here's exactly how it works. So those Nike shares that I own that are worth 27 cents per share, we have a massive amount of capital gains in that position. If you look at that position, nearly 100% of it is all going to be taxable if I were to sell it, because I bought it for 27 cents and then today it's worth about $62 a share. So for every share that I sell, only 27 cents is my cost basis, and the roughly other $62 I have to pay capital gains tax on. And if it's long-term capital gains, I'm going to pay roughly 23.7% plus state income tax on those dollars. And I don't want to have to pay those state taxes. So what I do is I donate those Nike shares to charity. And by donating those shares to charity, it ends up being really valuable for not only me, but also the charity. I can give more money to my favorite charity, and that charity doesn't have to pay any taxes when they sell that Nike stock. Not only am I giving that money away to charity, but I've also taken it a step further and done a more advanced strategy called a donor advised fund. A donor advised fund is a great tool if you're experiencing a large capital gain. Think about it if you're selling a business or you've come to a large sum of money through some sort of transaction. This is going to be a situation that you're going to have a higher earning income year and you're trying to minimize those taxes. And what a donor advised fund allows you to do is I can donate a larger amount of my Nike stock into my donor advised fund. The donor advised fund allows me to take shares of my Nike stock, get a tax deduction today by donating them to my donor advised fund, but I don't actually have to give them away to a charity in that year. So it allows me to bunch my gifts together, get the big upfront tax deduction today, and then I can slowly give money out of my donor advised fund over time. So that's the first thing that I've done with my Nike stock, that if you have low basis stock, I would encourage you to get educated around the different ways that you can donate it either directly to charity or utilizing a donor advised fund if you want to use a more advanced strategy. The second struggle that I have is, when do I sell this stock? It just keeps going up and up and up. And I rode that wave all the way through 2021 and COVID. And frankly, I thought it was just going to keep going up. It was a good reminder that stocks don't always go up and to the right. The important lesson here is to make sure that you are in a financial situation that no matter what happens with your low basis stock, in my case, my Nike stock, that it's not going to change your life. And for me, it doesn't change my life if Nike goes all the way to zero. And so for me, I've just made the decision that I'm fine continuing to hold on to it. I like holding on to it. I like the stock. Is it the best investment in the world? Well, we're going to find out 20 years from now. But for the time being, I'm just going to continue holding on to it. But again, the only reason I'm doing that is it doesn't change my life if it goes down by 50%. It doesn't change my life if it goes down by another 100%. And so for me, that's a decision that's specific for my financial situation. For your situation, you should be thinking about how much of an effect does a 10%, 20%, 30%, 50% decline have in my life? If you have $1 million, $2 million, $10 million in low basis stock, you need to be thinking about diversifying out of that position. Now, you've heard 100 people on the internet talk about diversification, but why should you trust me? Well, I've seen firsthand families hold on to low basis stock that is going to change their life. I recommended selling it. I recommended diversifying out of it, and it dropped by 50, 60%. Specifically, this has happened with a lot of stocks that I've seen throughout the course of time in my experience with COVID. So how do you exit that position if you're going to take my advice and diversify out of it? Well, there's a couple of things to be thinking about. Number one is we can just sell the position. But a lot of people, when they go to sell the position, they think, well, I'm going to owe a lot of money in taxes. Do I really want to do that? Still might be a good decision. So that's option number one. We just sell the position, we pay our capital gains taxes. My encouragement is to make sure that it's long-term capital gains where the top tax bracket is 20% instead of being 37% on the short-term capital gains. The way that you get treated at long-term capital gains rate is you hold it for over 1 year or 365 days. The other option you have with low basis stock is to buy puts on your position. A put is an options contract, and I want you to just think about it in terms of an insurance policy. You're going to take money out of your pocket to set a floor at which the position cannot go underneath. So if you have a stock that's worth $100, you could buy a put at $90. It's called the strike price, which means that for a certain length of time, you have the right to sell your stock at $90. So even if that stock that's worth $100 today goes down to be worth $50 during that window of time that you own that option, you can sell it for $90. A great way to hedge on the downside if you own short-term positions or you have a period in time where you really want to make sure you're protecting the downside in your portfolio. The last piece I would leave you with is to pull your emotions out of it. I have a lot of emotions to Nike stock. I have rode the waves over the course of time. It has been a very enjoyable ride for a lot of those years. It's been very painful for the last 5 years. For me, I'm in a position that I'm not overexposed or over leveraged in that position. It would sting a lot if it did go to zero, and I don't think it is going to go to zero, but it doesn't change my life. And so for you, my encouragement is you need to take your emotions out of your low basis stock and you need to make sure you're not overexposed and your financial life doesn't change if there's a 30, 40, 50% drop in your low basis stock. If you enjoy learning from people who have walked in your shoes and have real financial stories to tell, click the subscribe button below. We're going to be putting out more and more content just like this where I'm sharing stories about my own personal financial life as an entrepreneur and business owner.